We back with another one, man. Hit that like button, subscribe, and share, and tell your friends about that brown town opulence, man. We coming back with the Nvidia $500 billion AI finance. We're going to break it down and listen to Jensen Huang and see what he's saying about this, man, because this is a big deal right here. Let me go ahead and get into it. Let me go ahead and pull that video up so we're going to look at it right here.
Kind of amazing to get this group around the table, and Larry, to have you joining us remotely too. But we have to start with this news. Jensen, this is a big deal and it's a big number. $500 billion, more than that in terms of financing. We know this is an expensive build, but tell us a little bit about how this came together and what exactly it is.
Well, first of all, I want to thank all of my partners for joining me here today. I think this is the first time this has ever happened before, and I can't imagine a more important time to do it. We're announcing 6 partnerships today. These partnerships are going to pull together independent long-term capital to fund and support AI infrastructure build-out. This is an extraordinary time, as you know, because this is the first time in some 60 years that the computing industry is going through a fundamental platform shift from the way that software was done before to the way that it's going to be done in the future, called artificial intelligence. Fundamentally, what's different about this industry and this way of doing computing is that the computer is now part of the infrastructure, like electricity, like the internet. And so you have to think about it like it's infrastructure and build it out accordingly. Every company will be powered by it. Every country will build it. And so we're talking about an extraordinarily significant infrastructure build. This is
with a very hefty price tag, too.
It's a hefty price tag. Each gigawatt is something like $50–60 billion. And so there's energy involved, there's land, power, and shell involved, and of course there's the computing part of it. This is, of course, also a milestone for our company. We used to build chips that we sell, and these are technology components that people buy and use. But now, NVIDIA's AI factory platform is really an investable asset, an infrastructure asset. And the reason for that is because it's productive, it's revenue generating. It is fungible. It's used by just about every cloud service provider. It runs every AI model. It runs algorithms of all different types. And so it has really broad, deep reach and off-takers. This is a really great opportunity for us to build out the infrastructure, take advantage of an asset that is investable, long life, and productive. And with the partnerships that we have here, we can support a really broad ecosystem build out.
Click the wrong thing. But yeah, so they could be saying AI's in a bubble because they don't want to invest in early. They always gonna try to run away the retail investors so they can make the most money. They don't want people to make the most money buying early, buying at the bottom. They want everybody to buy at the top, and then they can sell. And while we holding the bag, we losing money. But here it is right here, man. These CEO of the companies of the top 6 that's being partnered: Nvidia, BlackRock, Blackstone, KKR, Brookfield, Apollo, and Goldman Sachs. I'm telling y'all, man, this is powerful right here. We're gonna break it down a little easier and simpler for y'all to understand. Hold on, let me get my HTML up. Hold on, let me do that one first. Probably be a little bit easy to understand. Gotta go to this window right here. Where is it? Right here. Boom. Bring that up right up. Boom. There it is. Boom. Boom. There it is right here, man. NVIDIA's, this is HTML right here, man. Your boy been getting a little better at this. Creating this stuff. Make it easier and simple to read so we can all understand it. So NVIDIA, $500 billion. Can y'all hear me? Financing. And then I'm going to play this right here. Consortium. Big word. NVIDIA's $500 billion financing consortium. What it is, why it happened, and single question that decides whether it's the strongest thing NVIDIA has ever done or the most dangerous. You got to be going in knowing everything is a risk, man. Everything is a risk. NVIDIA done shot up these past couple weeks, it had been below $200, and now it's back up, about to push to its all-time highs around 235, 236 pretty soon. That's just my opinion. This is not financial advice. This is just for entertainment purposes only. The whole thing in one paragraph: building AI data center costs more money than almost anyone has. So Nvidia got 6 of the biggest money managers on earth in a room and got them to agree to raise more than $500 billion to fund the build out. The chips and the buildings and the power to run them. Nvidia isn't writing the checks. It's the matchmaker. The money firms find the companies building data centers. Those companies buy Nvidia chips, and Nvidia sells more without borrowing a dollar. Why it actually matters? Wall Street just decided that computer power is real financeable asset, like an airport, a toll road, or an apartment building. That reclassification is a bigger deal than the headline number. So they're saying Wall Street see this computing power, these data centers, as a real thing that can make money. And when that happens, you know they're going to throw every dollar they can at it to build it out. That's why a lot of people saying, you can't stop. You can protest all these data centers you want. But when they see money, they're going to put it up and they're going to make it happen. Now, the only other thing is Elon Musk, he going to end up putting his in space. So I don't know. Maybe Amazon, I'm just guessing, speculating, Amazon might be the next company that do space-based data centers. But I think Elon with SpaceX and Tesla, they're going to end up being the first ones to expand into space. And now people going to be like, dang, we ain't even got to build it on land no more. And have these people complaining about resources and dirty water and whatever else they making up. You know what I'm saying? But they're going to get put up regardless, man. I'm telling you. 6 firms, one handshake. Nvidia is partnered with Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR to assemble more than $500 billion in financing at attractive rates for the build-out of AI infrastructure over time. The stated goal depicted dedicated pools of capital at real scale for Nvidia's customers. Jensen Huang said on CNBC that he approached only those 6 firms and not one of them said no. We looked at that video for the one that just getting on this thing. Hit that like button, subscribe, and share. Tell your friend about the Brown Town Opulence. The fine print is where the whole story lives. These are memorandums of understanding. Y'all know country folk, man. Big words. Structured so outside investors fund the data center power and infrastructure without adding Nvidia's balance sheet. The 6 institutions channel money to independent platforms that build on Nvidia hardware rather than Nvidia financing the projects itself. So Nvidia is not coming out of pocket $500 billion. They letting people, investors, fund the data center's power and the infrastructure without adding their $500 billion to their balance sheet. Follow the money, then ask if it comes back. Same diagram, 2 reads, talking between them. The only difference is one extra arrow, and that arrow is the extra bull versus bear argument. Straight line. So this right here, this was how it would float. The 6 money firms, 500 billion plus, financing platform, independent pools of capital, debt sits here, not at Nvidia, loans, equity, data center builders. And then you see they buy GPUs from Nvidia. The data centers will buy GPUs from Nvidia, AI clouds, neo clouds, sovereigns, enterprises. And then Nvidia sells the chips, puts up no cash. Nvidia converts the room. So the 6 money firms gonna raise the money to build a data center. Then the data centers got to buy the chips from Nvidia. Closed loop right here. Like I said right here, the only difference, One is the entire bull versus bear argument. Same format, but now we got a equity stakes into the 6 firms, Nvidia. Wow. We had that closed loop right there. This the straight line. Now that's the closed loop. That's why I like the HTML, man. We can get a real interactive platform to see. The closed loop, add one arrow, Nvidia equity stake in its own customers, and the chain becomes a circle. The seller helps arrange the money that buys his product and owns a piece of the buyer. Circles flatter revenue on the way up and amplify the fall if demand crashes. Everything is a risk, man. Everything is a risk. Let me see how much left. Can't be going through all this whole thing like that. That's why I want to create this platform, the paid platform where I could put this on so y'all could look at it, go in detail for yourself, because I ain't trying to go over everything in this short amount of time. You know what I'm saying? I'd rather you do it on your own, go a deep dive and do your own due diligence and your own research, because that's what you're supposed to do anyway. Because I ain't saying I'm going to lead you wrong or nothing like that, but I'm not a financial advisor. I'm not a financial advisor. The 6 firm right here, as y'all can see, let me go back up. He's struggling. He's running out of room. Let's just read them right here. The car dealership version. Imagine if you sell $200,000 sport cars. Your cars are incredible and everybody wants one. The problem was never desired. It's the almost nobody has 200,000 sitting around. Your sales are capped not by how many cars you can build, but by how many buyers can get a loan. So you walk down to the 6 biggest banks in the country and say, "I help you understand these cars. I certify that they're worth used. I make sure they hold value. You set up the auto loan department. The banks agree. Now your buyers can finance the purchase and your sales stop being limited by your customers' bank accounts." That's what Nvidia just did with GPUs. The bottleneck in AI was never demand for the chips. It was capital. Data centers cost tens of billions to build. The 3-step loop. They're probably the same thing. Yup, they're the same exact thing we did looked at on the diagram form. Now, I want to move on before I get up out that thing. I'm running out of time. That's why I want to put this stuff in y'all hands so y'all can look at it. I'm thinking about go ahead and creating that platform on WAP. And then create HTML like this. Interactive. Break it down real simple so you can understand it. And then we can get to this money. Now, the next thing real quick, Tom Lee, man. Tom Lee had been saying that this market is going to 8,000. The whole total stock market, S&P 500, is going to 8,000. And then he's still predicting that we're going to have like a 10% correction or even bigger because of the election year and the Fed, the new Fed. Some still say we haven't had that new Fed movement where the market come down because we got a new Fed. And then the election year, they said it's supposed to come down. So we might get hit with both of them at the same time. And they predicting this month, but I done heard and seen some people say September, October. But we just got to be prepared. But we about to listen to Tom Lee real quick.
Sizable correction in the market.
Tom Lee believes the S&P 500 could reach 8,000 by the end of August, but he also expects a 10% correction later this year. Let's hear why.
Tom, it's good to have you. I'll start with you first. You say we could go 7,900 to 8,000 this month alone. So this momentum is going to continue.
Yeah, I think the deleveraging that happened a couple of weeks ago put a lot of cash on the sidelines, got sentiment quite bearish, and then on top of people getting very skeptical of the Fed, got markets to de-risk. And now I think as earnings have been good, and I think there's a rethink of how inflation might be cooler than expected, and of course AI is still strong, there's going to be a chase. I think that chase takes us towards 7,900, 8,000.
Some are wondering whether people are too giddy. I mean, the nuance in your bullishness, it has been and it remains to be that you still think we're going to have a sizable correction in the market before we have a pickup. I was going to ask you before I read the notes that you gave our producers whether you thought that already happened.
Yeah.
And in fact, you don't think it happened already.
No, I don't. I think we've had a rolling bear market in a lot of groups, Mag 7 and software, crypto, and now the AI stocks. But we haven't had a broad de-risking. I think that is later this year. And it probably is around this inflation derangement syndrome that is the market is very concerned about, you know, whether the Fed should be hiking in September. I think there's a real battle until September. But our take, of course, is that inflation is much weaker. I think that there won't be a hike in September.
Well, I mean, if the market comes around to that view, then why would you have a 10% pullback? You think the market's just going to get so crazy with itself that it's going to convince itself that there's a hike coming in September? Even, by the way, amid reports in some publications that Chair Warsh is ready to do that if he has to, if inflation remains hot into that meeting.
Yeah, I think it's still hotly debated because there are economists who want the Fed to hike just to reestablish credibility with financial markets. We know the media and investors are impatient with inflation because it's at 2.6. They want it down to 2. But at the end of the day, if underlying inflation is much weaker, which is our take, then I think it's a mistake for the Fed to hike. But this is not a consensus view. I think it's still a battleground.
Tom Lee believes the
There it is right there, man. There it is right there. Now I want to try to pull up the S&P 500 right quick because it did and has been running at all-time highs. All-time highs. They hit a new all-time high. But now we hitting we rejected at 7.5. Let me see, can I put it up real quick? I gotta go through an extra step when I do this. Here it is right here. Bring it up. Boom. Right now, as y'all can see, this is S&P 500, man. I'm on Webull looking at the chart. We closed yesterday at 770. We had came down. Zoom out a little bit. We had came down from the highs up here. We was at 775 and got rejected. And all day yesterday, we came all the way back down to 769. I had played it on the way down. Now, we about to test it again when the market open, if it stay up here. Because like I said, we closed at 770.56 yesterday. Now in the pre-market, we up to 774.12. So if we hit 775 as soon as the market open, we got to see what's going to happen. Now I'm moving my line. We got to see what's going to happen. If we going to break through that 775 or we going to stay there and get rejected like we did yesterday right here on this counter right here. This the 30-minute chart. 30-minute chart right here. Sooner the market open, about that way, they're about 10 o'clock, these 30-minute candles. Soon the market open, we stayed right there at 9:30, and then by 10 o'clock, we had already got rejected, and then we started seeing consolidating right here. The next 30 minutes, the next hour, we were consolidating, and then boom, big drop down, big drawdown the rest of the day. Now we up in the pre-market, back to that 70, almost to that 75 level. And then we gonna see if we get rejected at 75 again, then we probably coming back down to 770. Really, this line, this green line right here, where we should have came down to all the way is 768. 768, 91. We should have been coming down back to that range, but I'm pretty sure get rejected, you coming back down to at least to 770, if not 776, 769 or 768. Get it out now. Get it out now. That's just my thoughts. Like I said, not financial advice. Not financial advice. But we still got time, because we only August 12th. We still got time to get to, got a break pad at 778 right there. That's my next green line. And then 778 will be the next move. If we break through 775, 778 will be the next resistance. And then after that, if we break through 778 and hold above 778, so let's just say 779, then we're going to 789. We're going to 789. Then if we break through 789, then we're going to 800. We'll hit that 8,000. As Tom Lee was saying, we'll hit that 8,000. Because we'll go from 778. I don't know if y'all can see that. That's why I'm trying to read it. I know it's real small. I know the number's real small, but my green line's at the top. My green line's at the top. This is the extended Fibonacci. Extended Fibonacci is what I used to get these numbers right here. So if we break through that 775, we're going to 778. Break through 778, 789. Break through 789, 800. Break through 800, 807. Them the next levels. So we got to watch and pay attention for them levels right there. And y'all know my formula for the ones that do. For the ones that don't, we trade off the 9 EMA. It's a little bit more detail and depth into it, but I got a whole video out of me doing it live. So, yeah, that's what we about to look at today. That's what we about to look at today, man. Well, I'm about to go ahead and hop out that thing, man. Hopefully that helped somebody and that explain some things right there, what's going on with the $500 billion financing consortium with these 6 companies. Nvidia about to get paid. Data centers about to get built. Money about to be made for a lot of people. That's the easiest, simplest way to put it. So with that being said, man, I appreciate y'all coming. Hit that like button, subscribe and share, and tell your friends about the Brown Town Opulence. Appreciate y'all.